Good afternoon, everyone. It is Thursday, May 29th, 2025. We have another chapter in the Trump tariff saga that continues on. And are we going to see more volatility ahead like we did today? Major volatility, in fact. Or are the markets coming down for a summer rally? Let's talk about it here. But please give the video a thumbs up. I like doing the videos for you. And YouTube likes it when you like them. It helps out the channel a lot. Also, come find me on carnivoretrades.com. For swing trading alerts, analysis, and live day trading. Today was a great day trading session. Yet another one, and we keep stacking up the winners again and again. So come check it out. I know you guys will like it. I know you guys will love our Gamma terminal, which we'll look at in a minute. For tomorrow's setup for how dealers are positioned, but nonetheless, big round trip here today. A lot of news to cover. We talked about NVDA earnings yesterday. I told you guys 140 was probably going to be a level. And yeah, that held. It worked as resistance. We were looking for really just 140 and possibly 120 if they missed. And yeah, just a lot of resistance. You know, not a lot of chart resistance too. I mean, a lot of anybody who bought from here, any of these like attempted, like if we go back on the chart, any of these like attempted breakouts here, anybody who bought above that's underwater. So you figure you're going to come back off of that anyway. But nonetheless, the dealer levels are showing us that. That was an area that I wouldn't short. I mean, you really didn't want, you're only up $1, right, if you shorted that. So it was not a short, but it was just resistance, and it's acting like it. But that got way overshadowed, obviously, by the tariff news. I'm not going to go into it because everybody knows by now. Now it's kind of getting not really walked back, but the market's realizing, well, there's other avenues that Trump can explore to kind of get what he wants. It's just such a, and this is why you never want to trade headlines. I shouldn't say that. You never want to trade off the headline itself, really. Like you have to be in position before that. You have to use the charts and the data to anticipate moves. Because if you're just trading, oh, Trump did this, and you think it's buy now, like you're gonna get run over. You're gonna be the last one in and the last one out usually. But nonetheless, here I don't care about the headlines. I just care about positioning in charts. And you can see right now, all we did here, if we just look at the spiders right now, where did we close today? 590, right? Like right into our, this is where we've been. Let's we can go to an hourly here. This has been kind of one of our midpoints, one of our point of controls. You got 585 and then 580 at the low end. So we're just in this big wide range here, really from, I'm going to use SPX actually, really from 58 to 59.50, right? That's kind of our playground right here, right? So yes, we did poke through the low, once or twice, and we poked through this high once, but this is the playground, right? So really no changes. And I've been saying, I almost like had to eat my words a little bit yesterday because I was like, this market's not ready to break out. It needs to tighten up more. And then of course, like an hour later, that ruling comes out and it pumps to 6,000, which, again, was just pretty incredible here, considering we had a huge trend day the day before. But nonetheless, yeah, I mean, it just wasn't ready to break out. So that's kind of where I'm at here. And again, this is not really, a lot of people are going to look at it and say, oh, it's a failed breakout. I don't really think so. I mean, yeah, kind of, but a failed breakout can also just lead to a breakout with more tightening up, which I think is what we need to do. Where it would be a failed breakout to me is if we had done something like this on the 4 hour, where if we closed below 58.50 today, even on like the daily, that would certainly be, I would be guarding longs very closely if that happened, for sure. But right now that didn't happen, and all we, let's just say tomorrow, I'm just going to say we got PCE tomorrow. Let's just say we dip on PCE and we close like this. Does it look like a failed breakout now, or does it look like another bull flag starting to form, right? So it's very important. I mean, this morning the hysteria was off the charts. Oh my God, we're gonna crash, we were able to buy a few dips here this morning, and just kind of standard procedure: buy the dip, leave a runner, get stopped out, buy the dip, leave a runner, get stopped out, buy the dip, leave a runner, then get stopped out. So leaving a runner here, and just do it until it stops, until it doesn't work. But the levels worked really well, and again, like I said, we weren't expecting follow through today to the upside. I said that in yesterday's video. So it shouldn't be a surprise that we had to come back and back check to this area. That said, though, yeah, we got PCE tomorrow. I think right now, structurally, bulls are in complete control, especially if we hold 5850. Now we start losing that, and we lose like 5800 again, especially on SPX, which only about 10-point difference between the two. But we start losing that, and then really like 5750. A close below that changes the structure, because then you're losing all the moving averages here. You're into the gap. You're closing below that test low, right? So that would be where I would start to say, okay, well, bears are starting to do something. But again, I keep saying it because it matters, but time is big right now. And they're running out of time to damage this chart here before dealer positioning starts to get really positive going into the summertime, right? So hedges will start decaying, and that will propel us up to new highs. That's my base case. So right now, we've been kind of neutral here. We actually were short like a week or two ago. Made a quick buck on it, nothing crazy, but right now we're a little bit more kind of favoring the bull side. The more this consolidates here. We can talk about the gaps all you want, but again, I keep stressing this, but when's this gap going to fill? When's that gap going to fill? When's that gap going to fill? We can go back a long time. Let's go back to the pandemic. When's this gap going to fill? What about that one? Right? What about that one? What about that one? That one didn't fill. So don't think, oh, that has gaps to fill, it has to go down. That's just going to get you. You'll know when it's going to go down. The market will tell you. Right? Price action will confirm that, and then you can start looking at the gaps. But right now, that's not a good enough reason to be just fading the tape here. And again, I said this all the time, but that kind of mentality is kind of what propels us higher here. So, but anyway, that's what we're looking at right now. QQQ again closing just up here. Again, 520 has been an equilibrium, a big point of control, and we've gone over that. By the way, again, basically closed right on that trend line. So that was the spike of that was the low of the day. And then we spiked it again, we closed right above it here. Now, is it the end of the world if this trend line breaks? Now, if we're still above like this inside bar here, there's really no, and as long as we're above the moving averages, it's fine. But I wouldn't be against it if we did dip a little bit more and put in more of a mature base here. But nonetheless, I just found it interesting that was where it petered out a little bit. IWM, again, you still got this inverse head and shoulder here that has not triggered yet, but it's close. And you can see the same thing on the YM or DIA if you prefer. So we're keeping an eye on those. We got PCE tomorrow. I still don't think we're ready to break out, but we're acting better. SMH, trying to break out of this bull flag. It's a little sloppy. Kind of have like an abandoned baby there, and then this like breakout attempt, but with no follow through there. We came off the highs, obviously, with NVDA there. I think Broadcom and TSM had decent days. Look at Broadcom, quietly very close to all-time highs now. That also helps out IGV and other, like hack, that cybersecurity kind of play. IGV, speaking of, still has a nice pattern here on the daily as well. Transports here were up on the day also, and still kind of putting in an inside bar. Again, very similar, right? Right shoulder could be setting up. So, if that does play out or triggers, we could be looking at new highs in the transports. I know people are going to probably like piss on this in the comment section. I'm just showing you what the target is. Okay, so the pattern is the pattern. I'm not saying it plays out. I'm just saying that's what it suggests. It hasn't triggered yet, though. So Jay Powell met with Trump today. Trump kicked him out of the Oval Office. No, I don't care. I'm just saying. I don't know what they said, but I think Trump told him to cut rates or whatever. But bottom line, you had a gap and crap on the 2-year yield. If this goes down and starts to break below this area, like 3.9, I think it's going to start going down. And then you're going to have a Fed cut in June. That's sort of been my base case. That has not played out yet, but that's been my base case, I think happens. And the long end actually looking a little bit weaker here, relatively. So you have like lower lows on the daily, whereas the 2 years actually holding up. So I think a little overzealous here. I still think long-term rates are, going to go higher no matter what. But again, that's in the long term. These patterns, right? This is a beautiful cup and handle here on the 30-year, right? Is really, like, this weekly chart is just very strong. I would not bet against that unless I saw something crazy out of positioning. But that's a very good pattern. The problem is, and I'll just point this out, you can go back to, I think I've pointed this out before, but you can go to gold and look at, yeah, we'll just use the monthly. It's the same thing. Like, actually, let me go back here. I remember right here, everybody was like, that's it, cup and handle, gold's going to $1 billion, right? And then it took, 3.5 years to break out of that structure. So the thing with those cup and handles is they don't always like play out immediately. Look at it. I mean, even like the smaller structure out of it, it just took a long time. So don't think that it's just going to break. It's going to break out right now because you want it to, or because it has a good look to it. It doesn't have to. So just throwing that out there. Silver actually holding up well too. I skipped way ahead here to make that point. XHB up 70 cents. VNQ, not bad. It's starting to firm up. XLF was weak, really weak earlier, but looks like, yeah, I just noticed that. Yeah, banks came back pretty nicely towards the end of the day. Look at KRE. End of the day, yeah, that came back nicely. That was weak earlier on. So banks held up all right. Broker dealers, again, basing beneath all-time highs. Oil backed off here. A lot of OPEC chatter, a lot of tightness. Volatility is coming in this. Volatility is definitely coming in this. So that's starting to get. It's not really that tight, is it? The 4 hour is definitely tight though. Look at that. So that's, yeah, volatility is coming. At least short term. So be aware of that with oil. XLE working on higher lows here. XOP same thing, and OIH as well. So maybe that volatility is up. We'll see. Nat gas down 2 cents. Not really too interested in that right now. Haven't been in a while. Dollar gap and crap on the tariff news. Dollar yen gap and crap on the tariff news, but held up. Gold still flagging, no changes there. It's still very strong. And these metals should be strong into June OPEX too, into the end of the quarter at least, from what I can see. Silver's pattern is getting nicer here, and it's getting tight. Platinum trying to consolidate after the big breakout. It's got more of that to do. And then palladium getting a little bounce here after the retrace. I don't like that one as much. And copper here backing off last couple of days, but I would say it's likely you could see a higher low here, but I'm not betting on that. Bitcoin backed off today. Still not broken. So retesting this shelf breakout area. And I wouldn't say there's anything wrong until if we close the week below like 105, then I would say that there's you could talk about a failed breakout. But even then, like it's not the you've had 7 weeks in a row up. So like, is it the worst thing that it has a dip here? So it's very important to like, see, I think the term failed breakout gets thrown out like a lot. Like right here, oh, failed breakout, and then 3 days later does it, or right here, oh, it's a failed breakout, and then it just, oh, failed breakout, and then an hour later it's back up, right? So it's important to look at the structure, like the volume and everything. If you have a big outside candle like this, yeah, then it's definitely, a lot more attention grabbing. Yeah, you probably have a major rejection, but when you just dip after, again, same thing here with ES. Like, that's why I'm saying it. Like, it's not like we closed down here, like with like 100. I mean, what was the volume at on SPY today? 70 million, 69 million, and I'm doing this at 4:30, so like this is including after hours. You didn't even break average volume, so it's not like we closed green too. Like we closed green too, so it's not like a rejection here. It's just more of a stall out. Like, oh, you got two. You weren't ready for that yet. You know, now tomorrow, if we, we close below, just or the big breakout low, then yeah, you can talk about it. But yeah, I just think that term gets thrown out a lot, and I will be careful about anointing it too soon. So, anyways, guys, I'll wrap it up here again. You guys take care. Don't forget to come find me on carnivoretrades.com. I'll see you guys all tomorrow.